So my name's Jennifer Reed. I'm the Vice President of Public Relations at Sound Credit Union. And we are thrilled to be a community partner with UWT and come and be a part of events like this. So one of our purpose is to stand with our members, employees, and communities through all waves of life. And one way we do that is by coming in and trying to help provide financial advice or just information that will help you all build your financial confidence so that when you are managing money right now or in your future, once you get out of school and you're managing housing and your student loan expenses, all that kind of stuff, like we can help you have the resources you need to be successful in what you're doing. So with that being said, how many of you have an auto loan right now? Yeah, a couple of you. That's good. Me too. I swear it sometimes feels like it's an expense that will never go away because once you pay it off, all of a sudden you think, oh, it's time for a new one. So be better about that. Save your money and put money aside and use your car as long as you can. But we're here today. I have my colleagues, Janelle Borseth, who's our manager or our consumer lending manager, and Kathy Fitzer, who is our indirect lending manager. And they'll talk about the differences in what they do at Sound. But our goal is to help provide you with tools that you'll need once you go to purchase your first auto loan or your second one, and just give you information you need that'll make you successful and find that interest rate as low as possible and making it so you can afford these types of things. So with that being said, Kathy and Janelle, here you go.
All right. So Janelle, why don't you explain to them what being a consumer lending manager means and what you do and how you and I work together. Go for it. And how long you've been at the credit union?
Hi. So my name is Janelle, and I have been with Sound for 23 years now. I started as a teller and had absolutely zero experience. I didn't know what I was doing or getting myself into. And I've worked myself over the 23 years through several different positions. And I'm now currently a consumer lending manager. So I manage the direct lending for Sound Credit Union. And we offer personal loans, auto loans, boat loans, credit cards, and all sorts of consumer related products to our members. On my team, I have a few underwriters, and an underwriter actually reviews a credit application and looks for all of the good things, right? They're looking at your employment history. They're looking at your residential history. They're looking at your credit references. They're looking at your personal references. All of those things combined actually kind of rate you as well along with your credit score and allow like maybe an approval or a counteroffer or even a denial if you don't actually have credit. So there's just a lot of different things that those underwriters look at. I also have loan processors who actually receive the applications and then work directly with you, the member, where they are going back and forth. They may need like some income verification, which is like a pay stub from your current employer. Or if you haven't been there that long, they may give you advice on, hey, I need a couple more months out of you at this job before we can actually proceed. They will work with you. They'll work and actually go over your credit and explain to you what your credit is and why it is what it is and how you can improve it, how you can increase your score and how you continue to have that good credit score. I also have some title specialists who perfect all of the titles through Sound Credit Union. And when I say perfect the titles, they're actually placing Sound Credit Union on that title that you have, as well as you as a registered owner. And then I also have some callback specialist. So if you actually purchase a vehicle at the dealership and then the loan gets brought over to Sound Credit Union, I actually have some team members that actually are reaching out to you as an individual and they're kind of going over and saying, hey, thank you. You purchased a car. Do you have any questions? Do you know how to make your payment? Do you know these options of making your payment? Did you know about shared branching where if you live over in Spokane and your loan's over here where you can go and still make your payment and all of those options. So I have a very wide group of team members and we work consistently from the moment we get in until the moment we go home with all of our members, and we provide exceptional member service and we literally value our members for life because a lot of times you have a good experience with one of our processors here at Sound Credit Union, you're 4 years from now, you're looking at buying another car, you're going to call that same person and be like, who was that person that helped me? And you're going to call that person directly and say, can you help me again? And sure, we will. So that's kind of what my team does. I absolutely love it. I feel like I'm living my purpose in helping people finance and refinance and buy their dreams, really. So that's what I do.
Nice.
Thank you.
And she does smile like that all the time too. My name is Kathy Fitzer, and I have been with Sound Credit Union for 2.5 years. I am the indirect lending manager, and that's kind of a weird title. I have been in the automotive business for about 15 years. Before I came to Sound Credit Union, I was regional vice president for General Motors, dealing in vehicles, obviously. And right now we service and provide lending to about 387 car dealerships in the state of Washington. What my team does is we deal directly with the dealerships, and we provide lending services, could be with current members, but also with non-members. So our relationship is specifically with the dealership, and we help provide lending resources to them. So did you guys know that buying a car is on the top 10 list of most stressful experiences, right? I get a lot of head nods, right? It can be very stressful. Dealerships kind of get a bad rap, right? I mean, it's like, oh God, I gotta go buy a car. Nobody wants to go do that. This is gonna be miserable, but it's actually can be really fun. And we are very fortunate here in the state of Washington. We have some really, really great families that run some really great dealerships. And I absolutely love it. People think I'm crazy because I absolutely love the car business, and it's a lot of fun. And working with the dealerships and helping people drive, I always say we put dreams in driveways. So we're going to help you guys understand a little bit more about that and what you need to know before you go buy a car. How's that? Okay. So if I can figure out how to make this thing go, there we go. Okay, so before you go, Janelle, let's talk about what we need to know before these folks head out to go buy a car. What are some of the things that they need to think about?
You need to know what you can afford, right? Because we can all say, oh, I need to go buy a car, right? You can buy a $3,000 car, $500 car, $30,000 car, or you can actually go out and buy a $250,000 car. What can we really afford? And how are you going to pay for that?
I think it's also, when you really think about the cost of car ownership, it is not just the payment, right? How many of you have noticed the price of gas, right? We're not all walking all the time, right? We watch gas go from what, $2.49 to $5 something and back down to $3. And you never really know how much gas is going to cost tomorrow morning. And it all depends on what's going on in the news. So the price of gas is a big deal, but also insurance. Insurance can vary depending upon your age, your gender. It can depend upon where you're driving, where you live, the kind of car, all these kinds of things. So it's really important before you go and buy that car, maybe reach out to your insurance company and say, hey, what are the best rated cars, right? What kind of car, whether you're 20 years old or 30 years old, what car is going to have the best rating to get the best rate on insurance? What's the safest car? What cars are getting stolen right now? We've all heard that Kias are getting stolen by a USB cord or something crazy like that some thief figured out how to do. So Kias right now, the insurance rates on Kias have gone through the roof. And Kia, of course, is hating it because they're a decent car with a lower price point, but folks are having a hard time affording them because the insurance has gotten crazy because some thief figured out how to start the car with a USB and they're all getting stolen. So you got to go check out your insurance, right? We just talked about gas mileage. The other thing is the maintenance on it. The electrical cars are great, but what are the batteries going to cost? And then buying versus leasing, right, Jeanette? It's one of those things.
There's quite a few options. Did you know that there's lease options to buy? Like, you don't have to buy it. Buy it. It's like you make those monthly payments. At the end of those payments, that term, that 60-month, 72-month term, you own that vehicle. There's also a leasing option or a lease-like options where you are only financing a portion of the car for whatever term that you might like. And at the end of that term that you've contracted, you actually just return the vehicle back to the dealership, and then you're on to the next. So leasing is actually really good. A lot of people like a new car every 2 years. So in the event that you could do that, leasing is a lot less because you're only paying for the term and the part of the car that you are buying, utilizing. So your lease payments are a lot less. You have it for less, and you are restricted on miles as well.
Mhm. And leasing is actually a really good thing. We actually have a program on used cars where you can actually lease a used car. And so that's kind of a strange thing. It's not something that a lot of people are aware of, but there are programs out there where you can lease a used car. And so it's really important that you can ask some of those questions and say, hey, how do we do this? And the finance office and the dealerships can talk you through some of that, or reach out to your lender, your credit union where you are doing your banking, or call us and say, hey, what's this used car lease program that I heard them talking about? Because there is availability for that. And the pricing on that, like Tacoma, Toyota vehicles always price out well on everything on a lease because they hold their value, right? If you have a car that will hold its value, that lease number is going to be the better option, okay? Let's see, what do we got next? How do I make that to go? There it is. There you go. All right, Janelle, credit score. What do you think about credit scores?
How many people in here know their credit score? That's actually quite a bit.
That's Credit Karma right there.
It is Credit Karma or Experian. There's an Experian app as well that allows you. That's great. We all have to have credit. We have to know our credit. If you don't know your credit, you probably don't have credit, or you have possibly negative credit. There's a lot of people that go down that road where it's like, oh, I just won't pay this bill. Bills affect your credit. Rental agreements affect your credit. Auto loans, home loans, they all affect your credit. Medical bills will affect your credit if you don't actually pay your copay. Your $30 copay can go to collections and actually give you a zero score. Well, zero score is a zero score, but you can actually have a negative score, a real low score that won't let you get anything. You'll never get approved for anything. Your auto insurance is increased with a lower score. So if you have a low credit score, you want to work at building that credit score so you can purchase things and understand your credit and the worthiness of it, and be able to live life with a decent score and less money. The higher your score, the less you're going to pay in interest, the more you're going to get offered to you. It's super valuable to know your score.
I think part of it too is remembering, I always think of the number 30%, right? Trying to keep, if you have a $1,000 credit limit on a credit card, try to not use more than $300. Right? Try to keep it down. Use it, pay it off. Use it, pay it off. Don't run it up and hold it there, because that's going to hurt you. Keep it down, because the higher your credit score, the lower your interest rate when you go to buy a car. Interest rates right now are way high. A year and a half ago, they were down 2%, 3%, 4%. We're approving loans right now at 6% and 7%. So people right now are not able to buy the really nicer, bigger cars because the interest rate's higher, and that's driving up the payment of the car. So now when you think, oh, I can afford a $500 payment, well, you're going to have to go get that Kia. You can't go get that Lexus, right? Because the interest is so high. So you really want to make sure that you're paying attention to how you're using credit, because those jeans, or that really great new makeup at Ulta, or all those really cool new shoes. Yeah, those shoes are going to cost you $200 instead of $120 by the time you pay the interest and get them off your credit card. So just be really careful with that kind of stuff, because it does add up and it costs a lot of money.
What is your budget, right? Do you know what you can afford? Do you have a house payment, a rental payment that you're paying? Do you live at home and your parents are charging you $300 a month? You have to kind of know what you're actually paying in order to know what you can afford, right? You can actually go out to the dealership and say, yeah, of course I want this car. Yeah, I think I can afford that car. And then get home and 3 months later, you're like, I can't continue making this payment. What do you mean I got to pay this for the next 7 years? So know what your budget is and how much that is, and how are you paying?
Mm-hmm.
Do you have a job? You pretty much should have a job before you actually do any type of financing. But do you like that job? Do you see that job for your foreseeable future? Or do you see yourself being able to improve that job and get yourself an even better job with a higher paying salary? So kind of know that, because you can have a job and go, okay, I need a vehicle to get back and forth to my job, but you actually hate your job, right? Go get that vehicle. You no longer work. What are you doing now? You're stuck with a car that you can't pay for. Mm-hmm. Your parents can only help you out for so long. Your family members, your friends can only help you out so long and lend so much money. So do know what it is that you are doing before you do it.
Mm-hmm. It's kind of like knowing what you want before you go, right? You have an idea of what kind of car you want. You know the look that you like. Do you want a two-door coupe? Do you really need the 4 doors? Do you need the midsize SUV? Do you need it to be all-wheel drive? Do you need it to be 4-wheel drive? Kind of those kind of ideas in your head before you go out shopping, so you're not going out blind. Oftentimes, if you just show up at a car dealership and a salesman greets you, hey, what you looking for today? Oh, I don't know. They're going to steer you and guide you, right? They're going to kind of take you to maybe the car that's been on the lot the longest, that their sales manager that morning said, you know what, that green Jetta needs to go today. And whoever sells that car is going to get an extra $100 bonus. If you go there and say, I don't really know what I'm looking for, I really need a car, blah, and that's where they're going to steer you to, you're going to end up with a green Jetta, right? Or whatever it is that, so you got to have an idea of what it is that you're looking for and understand, kind of go, what am I looking for? And you also want to make sure that you've already researched it. There's so much information online. It's like information overload all the time. You guys do research. You're all students, right? You know what you're doing. You know how to do that. You know how to go find information. Go read about your cars. Go Consumer Reports. Go look and see what they say. Read about it. You should probably find out and know more about the vehicle before you get to the dealership, and then you'll know more about the car than they do. So.
And that's super important to know more about that car than the dealership, because you'll really find a lot of value in that going there. You'll find that you're superseding them and being able to like kind of have, I kind of want to say like one up on them, right? Like, like in 2015, I was like, okay, I'm going to buy myself a brand new car. My very first time, it was a brand new. And I was like, what am I going to do? And so I knew I wanted a 2-door. And I went out and I was like, I think I want a 2-door BMW. And then, so that was what I was going to get. And I was like, you know what, let me be smart about this. This is a brand new car. That's a lot of money. I'm not sure I really should be doing that or I just want to do that. So I told myself, you know what, there's only 7 of them. There's not that many 2-doors anymore. So I was like, go out and test drive every single 7 of them and learn the specs of them, what I like, what I disliked about them. I was able to knock out like 4 of them right away. And I was like, oh, don't want rear wheel drive. Don't want that. Don't like this. Don't want to stick or, all of that good stuff. I ended up leaving with a Honda Accord, and I'm super, to this day, I still drive that car, paid it off, and I'm super happy that I didn't actually buy that BMW for $60,000 and I went and got my car for $30,000. So,
and you love your car.
I love my car.
I think we also hear a lot about electric vehicles, right? And I had a gal the other day that they had bought a Tesla. She had to have this car at this particular dealership, bought the Tesla, driving home. They lived about 3 hours from the dealership. Batteries died. And they had no way they had to call the tow company to come out and get it charged. And she realized, but they got it all taken care of and then got home, but they had to wait like 3 days to get the charging unit installed at their house. And she had no way to get her kids back and forth to school. So it's kind of one of these things where you kind of think about it, you think, okay, I want this, but there's a lot of forethought that has to go into some of these things before you go and do that, right? And making sure that you kind of covered all your bases.
Yeah.
So
electric vehicles are a thing of the future, right? All of our states want to move directly to only selling electric vehicles. They, like Kathy had just mentioned, you can't just go home and plug it into your normal outlet. You've got to have special outlets that actually can charge and utilize that cord itself. And then where and how far are you driving every day? Where you go on the weekends? If you're somebody that's driving an hour and a half up to your parents' house or your friend's house or to work, is that vehicle going to work? Is there a place to plug it in up there? So you have to really know that, because a lot of people get into electric vehicles and then they don't realize the outlets and the
charging stations.
Yeah. And the additional cost of the outlets are going to be at your house, right? That's plugged in at your house. That's costing you money on your electric bill.
Yeah.
So it's something to factor in.
Yeah. And I think also, when you're trading in a vehicle, like if you already have a vehicle or you own a vehicle and you're going to trade it in, you need to know what you owe on it or what it's worth, right? Because you can trade a vehicle in, and if you are financing that vehicle, you need to know exactly what you owe on it. So you call your lender and find out, right? A lot of times you can owe more on it than it's worth, and that's called negative equity. And a lot of times when that happens, say you owe $10,000 on it, but it's only worth $7,000, there's that $3,000 delta there. That $3,000 of negative equity would be added on to the vehicle that you're purchasing. So it doesn't just go away, right? They put it onto the new car. So you got to know what you're buying, and you make sure that you understand what it is that you owe, right? Or even if say your car's paid for, right? And you owe it, you've got the title. You're going to want to make sure that you look it up either on, Kelly Blue Book. You can go online and put your VIN number in, Kelly Book or JD Power or any kind of online tool like that, making sure you choose your options and find out exactly what you want on the vehicle. You'll get the ballpark. There is a little catch in all of that, is the dealerships have what they call wholesale versus retail, right? So dealerships deal with wholesale numbers and they sell at retail, right? Because they have the markup. So when you trade in a vehicle, they'll give you wholesale for it, but they're selling the car to you at retail. So there's a little wiggle room in there. So make sure you negotiate. If they tell you, no, I'm going to give you $8,000 for your car. No, you want $9,000 for your car, right? You want to get a little bit more out of them, right? You want to negotiate that. So make sure you always try your best to negotiate and have fun with it, because it can be a really fun experience. It can be a little stressful, but you can have fun with it too, and always try to wiggle around in that a little bit. But make sure that you do your job and know what your value is with your vehicle that you're trading in. So should I clean it up, detail it, fill it up? What should I do with my car if I'm trading it in?
If you're trading it in, yeah, you want to kind of, they're going to value it. You're going to pull up there in a really dirty car and, a bunch of fries in the back seat and all that. They're going to just be like, I think your car's worth, $3,000. I've got to do a cleanup on it. You don't want them to take away your value because of those fries in the back seat. And they will do it. So you really want to kind of vacuum it up, give it a wash, and don't fill it up. Take it in there and leave it at that. They're going to detail it. They're going to do all of that regardless, but they will downgrade you if you bring in a real dirty car, and they're just going to be like, who wants this car? We don't really want it.
Yeah. Make sure it's clean. I always, when I've traded in vehicles, I take it down to a quarter tank, because gas is expensive, right? I'm not giving that away. They're not going to give me a credit for the 65 or $100 I got in my fuel tank, right? They're not going to give me that. So I always make sure I don't fill up my gas tank. It goes in there almost darn empty. And then, you always make sure that you're cleaning it out, make sure you get all your stuff out of there. But the other thing too is, if there's little scratches, make sure you wash it, do a little something to it, because they're going to consider that to be body work, right? Something. Yeah, you need to do that. I mean, it's one of those things, right? It's cosmetic. It's true. They will ding you for it. So you just got to be careful and watch it, and just pay attention. But yeah, the big thing, and you don't have to do my husband is always like, well, the oil needs to be changed. It needs a new air filter. I'm like, no, don't. Because by law, when a dealership takes in a car and they're planning on whether they take it to the auction and sell it, or they're going to put it back on their lot and sell it, they absolutely have to run it through their service lane or take it to another, to whoever does their mechanic work. They, by law, have to take it through and do a safety check on it. They have to do the lube oil filter change. They have to do all of that. Even if I say, oh yeah, we just did a lube oil filter, we did all the air, we did all this. Oh, well, they have to go do it themselves. It's required. So don't do all that stuff. I always tell my husband, stop doing that. Don't do it. So, all right, let's talk about some dealerships, Janelle.
That sounds great.
That's the fun part.
So there's some big dealerships and there's some small dealerships, right? We've got, you've got your mom and pop ones on the corner on South Tacoma Way. And then you've got some big retail ones out in Puyallup, right? That are.
Yeah. Well, okay. So there's a difference, right? Who knows the difference in the kinds of dealerships? Does anybody know the difference in the types of dealerships that are out there? Independent versus franchise? Does anybody? Yes. What do you think? What's the difference?
Franchises are usually owned by big brand names versus privates are mostly private retailers or auctions or stuff like that.
Absolutely.
Perfect.
Used cars. Absolutely. So the franchise is like, say Janelle decides that she wants to be a Ford dealer, right? She's going to have a whole bunch of money tied up in that dealership, and it's going to be Borseth Ford, right? Or Janelle Ford. And she has to go through all sorts of hoops to become a Ford dealer. And she's got to do all these things and brand it the right way and the whole 9 yards to become a Ford dealership. And it's Janelle Borseth Ford. And so that is, there's certain things that she has to comply with. The Ford employees are always up in her business, making sure she's doing things the right way. So that's a franchise, right? Because it's owned by the big corporation, not owned, but Janelle owns it, but there's an ownership in there. There's a piece of it with Ford, kind of a relationship. Then there's the independent, like he said, kind of the independent on the corner. It's always a used car lot. They are licensed, they're dealer licensed by the state of Washington. They can buy and sell used vehicles all the time. I will tell you that those are, there's a lot of really great ones. Northwest Motorsports is an independent, right? They're independently owned. They're not affiliated with Ford, Chevy, Cadillac, Buick, BMW, Tesla, none of that. They're an independent, but there is a big difference. And so, we do business with both of them. I will tell you, when we have issues, the franchises are the ones that will be the quickest to jump up and say, we'll handle it. Because they just tend to have more cash. They tend to just be able to do that. And then the independents tend to be a little bit more difficult sometimes. So I always recommend to people, there are some independents that we really have a great relationship with, but I really like the fact that we have strong relationships with the family ownerships here in Western Washington. So what I would do, and I always recommend people to go to their website, go on the websites, check them out. Go check out Harnish. Look at Gilchrist, take a look at Titusville, go through there and just go read their website, see what they're offering. There's always, what's the word I'm looking for? Incentives for like graduates, $1,000 incentive for graduates. There's always there's different things that you can find out about what's going on in their dealership, whether they're having a weekend event or whatever. There's always things that you can learn about them on their websites that will help you in your process. So on the lot, right now, a lot of the dealerships are having, well, not so much right now, but they have had issues with getting inventory in. You all heard about the chip, like, they didn't have chips for the trucks. And so there were Chevy Silverados sitting forever in Michigan and stuff sitting down in Texas with no chips. And so they didn't have trucks on the lots and there was issues with inventory. So you could go on their website and you'd see that there was a truck and it would say in transit or coming soon, right? And so that's getting better. So when you're on their website, make sure that what you're looking at is actually there and it will say on the lot. So that's kind of the difference. So
Definitely save some time
Yeah.
on that.
yeah. What do you think about rebates and offers, Janelle? We talked about that a little bit, but
Yeah, we did talk about that. There's a lot of rebates, You can look on the website and see the vehicle offering selling for $30,000 and it may have a $5,000 rebate. So that $5,000 rebate typically isn't coming back to you. So a lot of people go into the dealerships and they feel like that rebate's going to come back to them, like they're going to walk away or get a check in the mail for $5,000. That's not how it works. It is applied to that sale of the vehicle. So you're technically buying the car for $25,000. The rebate's immediately applied to the sale of the vehicle.
I think it's also AutoSmart and Carfax. Carfax is really important. We also use AutoSmart as well, but Carfax is going to tell you how many owners that car has had and also if it's been in accidents. Accidents are typically reported by insurance companies, and that's a really critical tool, right? It's going to tell you kind of the history of that vehicle, right? Has it gone through a bunch of different ownership? And if it's a nice car, but it's bouncing around owners, there's something going on there, right? Something's happening that people aren't holding on to this car, or if it's been in accidents, right? There's an issue there. So Carfax absolutely tells you that. And if a dealer is not prepared to hand you a Carfax report, you need to walk away from the vehicle, is always what I tell people, because they should be able to readily hand you a Carfax report with no question at all.
You can always buy a Carfax. They're about $15, but honestly, I wouldn't do that. They are available. If you go on to any one of these websites, you're going to see somewhere in that small print, it will say Carfax. Click on that link. You'll see that report right there. My mom just called me last weekend and she's like, hey, I'm down in Olympia and I'm looking at this new Ford Explorer. And I'm like, oh, Mom, okay, wait, why am I not there? Why am I not there with you? And she's like, I think I've got this. I've got your sister. And I'm like, have you pulled a Carfax? She's like, what's that? Like, that's my point.
Mom.
That's my point. So I was like, where are you at? What are you looking at? I was able to get on the website real quick. I looked at that Carfax and I ran through it really quick. And I'm like, okay, you're good. It's a good car, Mom. I like it. I was actually pretty impressed with the Carfax recently. It's been a while since I've actually looked at one. A lot of times, like Kathy said, they'll tell you the service records. In this situation, it told you exactly what was done in the service record. I was really surprised. I was like, oh, wow. It had this issue and it's been fixed, and it tells you everywhere it's been serviced, every owner, every time it's been, the vehicle tabs are there, every accident that's been reported. Yes.
Going off of that, very well.
Yeah.
What about instances in which cars can be transferred from state to state?
Yep.
And you know how some cars slip through the cracks? Is there a better way to check on those as well?
There is. So Kathy, do you want to touch base on this one a little bit more?
That's typically a titling issue, right? And we see that we have a really, it's called IVIPS. and we can track that through the VIN numbers from different states to state. And we tend to really, we kind of slow walk when we start seeing things coming from out of state and that transfer. We really work closely with the dealership with that. We do not like to do out of state personal purchases like that, but we can absolutely track that down when there's an out of state type of thing. We really dig into it because there's an issue with, we all have what's the word I'm looking for? So like chop shops and stuff like that, right? So they're car rings, car theft rings. That's where a lot of that stuff stems from when they're coming up out of California or out of Arizona. There's a whole big car theft ring that's washing car titles. And that's a great question. And so we really rely on our like McCollum title licensing agencies to help us with that and kind of track down inconsistencies in title applications and the whatnot of those. So thank you. That's a good question.
Yeah, that's a great question.
Mhm.
I kind of wanted to kind of sum up on that. That's actually really an exception. That's really not the norm. You don't necessarily see that all the way. And I'm surprised you actually knew about that. That's something my team is actually learning more and more about. They kind of look for ways on that, like, hey, wait a minute. Why is there a field in here that's like kind of missing, or I don't see this? So why is this vehicle here and it hasn't done anything? You can see it. Another one of the things I tell my team and my members about is if a car deal is too good to be true, it's too good to be true. There's a reason it's being sold. So a lot of times in incidents where there is issues like you're stating with maybe a title washing, like Kathy had mentioned, there's a reason they want to get rid of it because they know that it's not. There's a brand in there. Typically in that case, there's a brand. It was a total loss is why it would be title washed. It's a total wash, or it's a total loss where it was then maybe fixed and then not necessarily certified to be able to sell in the dealerships again. So that's where they're typically washing the title and trying to like do a quick sell. So if you see something that's valued at $25,000 and they're trying to sell it for $12,000 and you're like, oh my God, I have to get this vehicle like 2 hours ago. I have to get it because it's going to sell. Let the car sell because it's something you don't want it. So branded titles are branded and they're branded for a reason and they're hard to sell. So the branded title is never going to be the same value that you see on those.
Yeah, that's a really good question. Yes.
There are dealerships out there that only exclusively sell rebuilt title.
Yes.
So do you guys finance?
No. No.
We
Well,
do on the direct side.
Well, on her side, she does.
Yeah.
Because on our side, so we call it different sides, right? Because she deals with members directly and we deal with the dealerships indirectly. So because we don't ever really get to see the customer, the client that becomes a member, we don't have the relationship. So on our channel with the dealerships, we do not do rebuilt titles. On her side, they do.
There is,
So
yes.
there's a little bit different caveat. Go ahead.
We won't, but those dealerships tend to know what finance operations will. So they're not going to send us to Sound because through our indirect channel, we don't actually take the branded vehicle. And it's because we actually want to talk to our member about it, right? We want to make sure that they are aware that it's a branded and what branded means to them, what it means when they go to resell that vehicle, right? So on our direct side, we are member facing. We're with the member. So you come to me and you say, hey, I'm looking at buying this, this Toyota Tacoma, right? And we pull a VIN on it. We pull it up and we say, oh, wow, this is branded. Did you realize that this has been a total loss and it's branded on the title? Most generally, I'll say 98% of the time, you're going to be like, yep, or nope. And I don't care. I want this car. And so then we have to do our due diligence to say, okay, so we're going to pull the value up right here and show you that the value on NADA or JD Power will say $20,000, but we're not going to honor that value because it's branded. We know that when you go to sell that car or trade it in, the dealership's not going to take it. Most of the dealerships won't take it. And you're not going to be able to sell it to somebody unless they are okay or you get past that branded title. So on the direct side, we do finance them. We will only finance about 70% of that value. And there is options available through our Auto Smart Check, which is kind of like the Carfax, where you can actually register your car and be able to have some protection to be able to sell it or even get a buyback protection guarantee. And that also works in the same scenario as that title washing.
That's some good questions.
Mm-hmm,
And I
great
think
questions.
to kind of frame that up a little bit, when we talk about the indirect channel, there's a a company that we work closely with, and it's an organization called Cuddle, and that's called Credit Union Direct Lending. And what that is, it's an organization that provides lending opportunities to dealerships, so that when you go into a dealership and you go into the finance office and they decide, oh, we're going to finance this loan, finance this vehicle, you fill out the application and they send it to credit unions. Okay, they can send it either to like Ford Motor Company or General Motors or whoever, or they can send it to credit unions who typically have lower interest rates. We just do. We have lower interest rates because we are not for profit, right? We don't want to make a bunch of money. We will make a little bit, but not a whole lot. And we want you to become members, right? So they send it to the credit unions. That would be what my department is. That's how we grow our membership base, is through that. So the Credit Union Direct Lending, it's called Cuddle, and it's indirect because I'm getting that loan indirectly from the dealership. So that's the difference. If she gets her applications directly from the members, we get the applications over here from Cuddle. So that's that difference that you were just asking about. Yes. The majority of them, yes. There are certain caveats that have to happen. There's some requirements for a dealership to be able to participate in that. Oftentimes they have to be in business for 2 years. They have to have certain credit requirements. Not just everybody can do that. They are vetted, or they can be sponsored on by a credit union. And we have actually done that with a couple of dealerships that we have good relationships with. Say we have a longtime finance director that has been at a large dealership and he wants to venture out and open his own, but yet we know he's really a good employee and he's done great things. We maybe will sponsor him onto the program, but generally they're vetted very strongly before they can go onto that and send us applications. And then we basically go into business together. So that's how that goes. So when you go to that finance office and that's how they connect you to other credit unions, is through that channel, which is the indirect channel that feeds it out to all the credit unions. Okay. So when you go out to these dealerships and you have all this fun, right? How do you know? What do you negotiate when you're in that office, right? So you talk about what you want. You've already know that you cleaned up what your car you're trading in or whatever, and you know what you want. If you want leather, darn it, make sure you get the leather, right? If you want to make sure it's got a sunroof, I will tell you, I have to have a sunroof. I cannot stand being closed in. I can't do it. I just don't like it. I hate it. I have to have a sunroof. Gotta have it. It's just, whether it's the light or whatever, I will not negotiate on that. And so that's the thing, right? I prefer to have leather because I can scoot in, right? Because sometimes if you're wearing like wool pants or something in the wintertime, you're trying to get across on cloth seats is terrible, right? So there's certain things that it's true story, right? I see you guys nodding back there. It's true. You know, I'm right. Or like even heated seats, man, you want to see, and then if you've had ventilated seats, those cold seats in the summertime are awfully nice, right? Those are certain things that you have to have, and they're non-negotiable because you're paying for this thing. And if you're paying for it, get what you want. You want to be reasonable because, we can't all have apple pie to begin with. Sometimes we have to start with this and then work our way up, which is completely fine. It's appropriate, but you have to kind of know what you want, right? Making sure that you get the things that you want, but don't give up everything. Just make sure that what you get is what you want, and don't get talked out of what you want, right? Because at the end of the day, a car salesman, their job is to sell cars and to put shoes on their kids' feet and to make sure they can pay their bills. Just like you have a job, you got a job to do, they have a job to do. They're good people. They're not there to rip you off. They're just there to sell a car and make a buck, right? So you got to know what you want. So, and can you accept, I remember having a conversation one time about this car. It was black leather. It was all the things. It had the right engine. It was fabulous, but it didn't have a sunroof. And they thought I was crazy because it was a great price. I'm like, no, it doesn't have a sunroof. I'm not buying it. So, yes. Oh yeah, that's on the next one. I think you're good. No, you're good. I like it. You're keeping us going, Jen. I'm liking it. Because gap, I'll answer that question right now. I'll just go to answer the gap question. Gap insurance. Does anybody know what gap insurance is, since Jen brought it up? Anybody? Gap? Yes, I got a couple. Yes. Yeah. So say you God forbid, you get in a car accident, and you owe $10,000 on a car and it's only worth $8,000, the majority of policies would pay that difference of $2,000, right? There are, however, you got to make sure you read the policy, because there are policies out there that don't necessarily cover all of that. So there's like the 70-30, the 80-20, there's all these different ones. So you want to make sure that you read the policy, and also making sure that you know your insurance company. So there are some insurance companies out there that if you have full coverage insurance, they automatically provide gap insurance. So you want to make sure that you know what that is about too. We have a product, and Janelle can speak to it, that's really cool, that helps you with some of the other losses. Janelle, what about our gap?
So our gap is actually called guaranteed asset protection. So like exactly like you said, it covers a deficiency up to a certain percent of that LTV. So that's the other thing about buying a car, right? Like if you're buying a car that's valued at $10,000, then you've got to pay sales tax, right? So you're paying your $2,000 sales tax. So right away, you walking away, you're upside down on your LTV. So you have to kind of make sure, like, what is it covering? You can go to a dealership and buy a car. A dealership can sell a car for whatever they want. A car can be valued at $10,000 and they can sell it to you for 25 if it's worth 25 to you. So right away, you can be walking away from the dealership with 177% loan to value, and still within the terms, still within the same contract, still legally obligated to buy it and make payments on it. So gaps every single gap is different, and they do have that LTV gap. So you've got to make sure that if you're buying something and you have 177% LTV, our gap only covers 135% LTV. That's typical and average, but you want to make sure that you know that. So it's not going to cover that full deficiency balance. So you could still possibly have it. So I think it's super important to understand, like, gap isn't always going to cover it. You have a DWI, it's never going to cover it. So you're in any kind of illegal activity, and the car is repossessed or anything like that, gap's never going to cover it. So gap isn't always guaranteed to cover it, but it is guaranteed to cover a deficiency balance up to a certain percent at that time. And I know along with our gap that we do provide our members as an optional purchase, we have some added value to that. We have an auto deductible reimbursement program. So we will reimburse you up to $500 for every time you have to pay a deductible. We'll reimburse you unlimited amount of times for the first 3 years of that loan. So let's say you get a rock chip, you pay your deductible, you then can submit a claim and actually get your deductible back. So that's something that comes with ours as well as we have a total loss that comes with it. So you have a total loss, unfortunately, and you now are back in the market and you need to go get a new car. You bring that loan back to Sound and we're going to put $1,000 on your new loan after it funds. So there's a lot of things that come with it outside of just that deficiency balance. So you really want to pay attention to those, because those are some added features that our gap offers, and the dealerships will also have gaps, and they're different companies and they may have their benefits as well. So I don't want to say ours is better than the others at all. Just pay attention and know what you're doing.
Yeah, we call that back-end product. So after you've chosen your car, right now you're in the finance office and they say, okay, great. We love this, this red Honda Civic is really awesome. Do you want a service contract? There is a warranty with it. Let's talk about a service contract. The difference between a service contract and a warranty comes with the car, right? So when you buy something and the manufacturer covers it, that's called a warranty, right? That's a free product. It's warranted, right? They say, if this happens, this is going to get fixed. A service contract is something that you pay for, right? So you're paying for X, whether it's, you're going to get your, the wiper motor goes out, you can have that replaced, or say that, you've got an issue with your calipers or whatever, brakes issues, transmission issue, you can purchase a service contract to cover some of those things. And all that stuff will be presented to you in the finance office at the end. And those are all called back-end products. And those will all be presented to you at that time. And they're all negotiable. Every single one of those items are negotiable. And if you really, really, really want that service contract and it's $4,500, you can say, well, I really only want to pay $4,300 for that. You can do that. Absolutely. If they tell you, well, our gap is $995, you can say, well, but I really only want to pay $795. Do that. You can, and they can sell, they can reduce the price. You absolutely can do that. It is negotiable. And there's a $200 doc fee document fee on contracts in the state of Washington. A dealer can charge $200 for processing paperwork. That is negotiable. You can tell them, I don't want to pay that 200 bucks. I think you should only have $100 for processing my paperwork. You can do that too. It's completely negotiable. It is not a mandatory fee that goes on that contract. So you could do that. Let's see what else we got. So before you go, anything in life, you got to read it. Read before you sign, read before you sign, and read before you sign. A lot of the dealerships have these really cool things. They're like, the top of the desk will be like this big black square. And then they hand you this really cool little pen like you see at the grocery store, you know? And then it's kind of like Etch-a-Sketch when I was a little kid. But you signed like anywhere on the desk and it puts your signature on the screen, right? And that's how you sign. And you're just signing all these documents and you never really see them. No, you need to read what you're signing, okay? Because there's a lot. There's a whole bunch of signatures that are needed when you buy a car. They need to turn that screen around and you need to be able to review those documents, okay? It's a fast process in the finance office, especially if it's a Saturday. A Monday or a Tuesday is really the best time to go buy a car. Or no, not a Monday. Mondays are bad because they're catching up from the weekend. Tuesday, Wednesday is the best day to buy a car in a dealership. It's quieter, it's slower. Make them slow down. Make them slow down in the finance office to give you the time to read what you're signing. Okay, that's really, really important. If I say anything else, slow down the process and always make sure that you are reading what you are signing.
Once you sign that paperwork, it's a legally binding contract. You don't have a 3-day grace period to go turn that car in. You can't drive it home and then realize, oh my gosh, I really wish it did have that sunroof, or I really don't like it, or you know what, I really shouldn't have gotten this big truck. I don't know why I did. I went there for this car and I walked away with this. There is no grace period. It is yours. You're legally binded to whatever you contracted and the terms are yours. So if you're wanting only a 5-year term, great. Make sure you're signing for a 5-year term. If you're wanting as long as you can go for that lower payment, great. Make sure you know what you're doing and that you can afford that. As long as you haven't signed that paperwork, you can walk away. I always tell my members, there's always another car. Walk away, go get something to drink, go get lunch, make sure that you don't feel like, oh, I just ended up in the financing office and I ended up signing the paperwork. Know what you're doing. And it's okay to take a break. It's okay to go out and, you know, go get a Starbucks while you think about it, or go call someone, because I can't tell you how many people buy a car, go home, and then their family says, why did you buy that car? Why did you do that? You got ripped off. And then immediately they think they got ripped off, regardless if they did or not. So just kind of do your due diligence, know what you're doing, and go with your gut. If it doesn't feel right, it probably isn't right.
And take your time. And when they, you know, you're signing electronically, yes, good question. Yeah. About. No. I haven't heard that yet.
I haven't either.
I haven't. You know, they do have to go through and do the safety inspections. There's an 18-point safety inspection that they do have to do as required in the state of Washington. Actually, like in 38 of the states, it's a requirement. But they, I have not heard that yet. And a lot of the dealerships, you know, will provide like a, you know, they do like an as is, where is kind of a thing. You know, some of them, if you're buying like a 21 or a 22, sometimes there will still be a manufacturer warranty remaining, you know, 36 months or whatever it is, or mileage, 36,000 miles left on the warranty. Sometimes that'll be left over, but I have not heard that yet. That's interesting. I'm going to look that up because I wasn't aware of that. Yes, ma'am.
That's true.
Yeah. So dealerships, they have insurance of their own, right? They have insurance. So when you go for a test drive and say you get in an accident, their insurance covers that, right? And their insurance is very, very high. It's preferred that they have your insurance, because if they have your insurance and you're driving their car, then your insurance covers that accident, which is the difference. After you purchase it. So you've already purchased it. Right. And the reason Right, and the reason for that is because the title hasn't transferred yet, and so they want to make sure, so it's a transference of ownership really during that period of time, because they've got the contract that says that you purchased the vehicle at this time, at this hour, it would have been covered at this time, and that if there's an accident, say at 5:05, and you sign the contract at 4:45, it was actually covered under Allstate insurance versus their insurance. And that's what it's for. It's just covering their insurance purposes afterwards. And yes, ma'am, Jen. Mhm. So it's twofold. So with my team, one of the things that we do require is that when they send all the documents in, we require, one of the things is an agreement to provide insurance, is that we do have they are required to provide us with your insurance provider's information on a document that states that you are required to carry full coverage insurance at all times during the term of that loan. So that comes into us. Your insurance company, when you contact them to provide insurance on that vehicle, and you tell them I'm financed with Sound Credit Union, they will then send that insurance binder to Sound Credit Union. Now, there will be a point in time when you renew your insurance, and maybe your insurance company doesn't send us information. Our loss management team will send out a notice to you that says, hey, we need a reminder that you're covered with insurance. If your insurance company doesn't send it, you're responsible to then make sure that we have your insurance information, because if you don't have insurance on your car, we will place an additional insurance binder that's very expensive for you, and you don't want to do that. So you always make sure that your insurance is on file with your lender. Yeah. So, all right. So we know that we always ask for copies. If you're signing on that on the DocuPad, they will email you your documents. But again, making sure you know what you're signing. So any other questions? Any other questions? Yes, sir.
So lease versus financing, I have a question.
Yes.
And actually, my follow-up question is about buying brand new versus buying new.
Mhm.
Because I got stuck in a situation where actually it was just 2 weeks ago, I was going to buy a car, okay? And I tell them my budget, this is what I'm able to afford. Starting right off of that, salesman 10 grand above the car level, okay? Then we start getting into more questions. Pretty soon, I'm paying almost 40 grand above what I had planned to buy for the car.
Mhm.
Sitting at, we're about to sign on, and I give my dad a call. I was like, hey, I'm about to make this purchase. He was like, what are you doing without me?
Yep. Yep.
You got a good dad.
I got home and he said, do you really want to do this? And I was like, you know what? I was going to do it. Like, well, you stopped me. He was like, well, let's rediscuss, reevaluate. And we said, no. Now these questions came in versus leasing versus buying. If I end up leasing a car, I don't get to sell or keep that, equity in that car. Because it's like renting a car.
Correct.
To a certain degree.
That's with your general lease, right? As I mentioned earlier, we at Sound have a lease-like option. It's called Auto Advantage. It allows you to basically lease a car, but you own it, right? You can purchase all those products. You can sell it. You can trade it in at any time. You can buy used. You could buy new. It's a really.
Were you at a franchise?
Yeah, I was at Audi.
Yeah, so on the Audi leases, okay, so here's the deal. So, okay, so you were at a franchise store, right? Okay, so when you go, okay, I'll just be honest with you. So, yeah, okay, if you have a budget of $500, never tell the dealer what you want your payment to be, right? Don't ever tell them the payment, because they're going, oh yeah, well, they said 500, they really mean 600. So you never do that. So full car price. So what they will do on a lease, when you think of a lease, right? And you say it's 24 months or 36 months, you're only paying for a portion of the car, right? So you're like paying for the front end, the first tires, right? The front end. And so say the car is worth $50,000 and you're going to do a 36-month lease, and they are going to guarantee that car is going to be worth say it's $50,000, okay, $50,000 car. They're going to tell you, okay, this car is going to be worth $30,000 in 3 years. They're going to guarantee it. That's called residual value. So 30 grand is worth $30,000. So your lease, you're leasing it for $20,000. They're going to take that $20,000, spread it out over 36 months. They call it a money factor. So rather than interest, they call it a money factor. And then you have this money factor that's put in, and they do all this little calculations and come up with your dollar amount each month, right? Correct, right. And your money factor goes up for more mileage. The more mileage you want, the more you pay for that money on that car. So now here's the interesting thing. Remember how the values of used cars just skyrocketed in these last 2 years? Now that Audi, say you had leased that Audi 3 years ago, and it was time for you to turn that Audi in because your lease was up. Well, used car values shot through the roof. And what we were seeing at the credit union was people's leases were ending with those kind of vehicles, and they were going in, and the residual said 30,000, right? Because they could walk in and drop the keys off. But the used car value was 40,000. So they had $10,000 of equity in that vehicle. So that equity they own, and they could take that equity off that vehicle and do something else with it. So leases can be really, really great, but you got to keep the car in really good repair. You got to make sure the tires are good. You get, those low profile wheels, man, they're really awesome. But boy, those curb and those rims are terrible. Yes, Jen. Every day. Yeah. Yep. Right. Yeah. Well, and leasing, the reason why dealerships love leasing is because you're a guaranteed return customer, right? You're guaranteed. And you don't, if you go to Harnish and you lease a GMC or a Buick or whatever, you're more than likely 90% of the time you go back to where you leased it from, but you could take it back to another dealership. Probably not, but you could go back there. You're guaranteed. They're guaranteed that they're going to have a return customer, which is why the leasing thing is so good and why they put those programs out there. No. Mm-mm. Yep. Nope. Nope. Mm-hmm. Right.
Yep.
Yep.
And definitely, and we at Sound don't do leases, right? Those leases are actually owned by the dealerships, but we have a lease-like option. So I recommend if that's something you're interested in doing or want that lower payment, look at our website, and it's called an Auto Advantage loan. You can actually go on there. You can get a newer vehicle and pay less money.
I think the other thing that we didn't talk about, and I know we're probably way over time, and you guys have been great, but is the term of the loan, right? So there's 60 months, there's 24, 36, 48, 60, 72, 75, 84, 96, 120 months. Can you imagine paying for a car for 10 years? It is out there. Alaska Denali Federal Credit Union will write an Escalade $130,000 vehicle for 120 months. I can't even imagine. I mean, I've never kept a car that long. But I don't even, but just don't start. But it was seriously, can you imagine 10 years? Like 10 years you're paying for a car. That's like almost a third of a house. I mean, you'd almost have your house 10 years.
Yeah.
Who does that? Anyway, yes, ma'am. No,
Yes
yes,
and no.
no, yes and no. So the dealership, we call that.
There's fair credit. There's
fair credit reporting.
So
yeah.
fair credit reporting with credit, right? So like at Sound, whatever your credit score is, you're falling into a tier. That's what we have to give you, which is a range. Yes. So the better your credit score, the lower your interest rate, the lower your term, the better your interest rate. So yeah, no, you don't really have negotiating power on your rate due to fair crediting, because that's in place for you to always. So that way you are going there and getting the interest rate that you qualify for, right? So when you walk in and you don't know much, and I can tell you don't know much about a car, I'm not going to be like, oh, I got this one at 18%, right? And then you walk in and I'm like,
Well, I think,
I need to sell this car. I'm going to get her at 7%. It lowers the payment. You just really can't do that. So that's where fair crediting is. And so you are getting an interest rate that's qualified for you.
well, and I think the other thing too is when you are in the finance office and they say, oh, we got you approved. And they tell you, oh, you're approved at 6%. Say, okay, what banks approved me or what credit unions approved me?
Yes.
Can you show me that? And the reason why is because the lenders, there's a relationship there, right? So oftentimes they may send that contract to Sound Credit Union because we have a relationship with them. But what happens if somebody else had a lower rate that somebody else could have? So you want to make sure that you ask them what rates are out there. Yeah.
Yep.
Yeah, Jen, you had a question.
One last thing, just thinking about your monthly payments and things like that. This applies on any loan you have. Auto loan. If you can make your payments, like pay an extra
Oh, yeah.
$50, an extra $100. So if you get that loan on auto. Okay, my payment's $450. Can I pay $500 every month and pay a little bit more
Mhm.
faster? I can bet that you
Yep.
don't necessarily be tied into that as long as you're paying more often.
Yeah, that's a great point, Jen. I highly recommend actually paying a little bit more than actual payment, right? Because let's say come holiday season and you're wanting a little bit extra money to spend. Is there a way that you can actually advance your due date a few months by paying extra? So more you pay $50 extra and the next thing you know, within 4 months, you've actually advanced your payment a month and you can actually skip a month.
Yeah.
So there's advantages to paying extra.
Well, thank you, you guys. You've been great. We love having conversations about cars and I love having conversations about car deals because it's fun. But thank you for your time and we've enjoyed being here today. So thank you. Thank you very much.
Well, thank you very much.
Mhm.